Good afternoon and welcome to this webinar brought to you by Citadel Wealth Management and the Paternoster Group. My name's Lawson Naidoo from the Paternoster Group, and I'm joined this afternoon by Maarten Ackerman, the Chief Economist at Citadel, as well as my fellow founding partner at the Paternoster Group, Richard Calland. We did this in the midst of the COVID-19 pandemic. In South Africa, we are 9 weeks into a lockdown here. We've moved from a full-blown lockdown to what government has termed its risk-adjusted strategy, moving from through various levels, 5 levels of this risk-adjusted strategy. In his address to the nation on Sunday evening, the president announced that the whole country will be moving to level 3 as of the 1st of June, from Monday next week. What we've seen with this pandemic is that the trajectory of the curve has been growing exponentially in recent times after the initial flattening as a result of the hard lockdown that was imposed by government in terms of the state of national disaster on the 26th of March. So this is quite an ironic situation that we're beginning to open up the economy by moving to level 3, allowing greater levels of economic activity, as well as some relaxation on the social restrictions that have been in place. And we do this as the infection numbers start to increase across the country, but particularly, of course, in the Western Cape, which is seen now as the hub of the pandemic in South Africa at this point in time. The purpose of the lockdown was initially to buy time to enable us to get our public health services and equipment in place to be able to deal with the inevitable spread of the disease that we've seen across the globe. This now, as we move to level 3 and begin to reopen the economy, it marks a critical juncture for our government. We know that the economy has halted as a result of the lockdown, and this follows on from the stagnant growth coupled with the downgrades that came about at the very beginning of the lockdown. So the question for government has to be, which we'll explore a little bit later, is where to from here? There's much talk of an opportunity to press the reset button, to redirect the economy, to begin to tackle some of the challenges that we face in South Africa from the point of view of structural reform. And I think this brings into question issues around the capability of the state and so on. And I think it's worth I want to quote briefly from a piece that some of you may have seen in Business Day this morning, written by Sipho Maseko, the CEO of Telkom. And he says, so what shall we do? The most obvious next step is to recalibrate and reimagine how we want to organize ourselves. That is particularly important in South Africa, where the need for great structural change predates the coronavirus. For South Africa and African countries, this offers an opportunity for a paradigm shift. Though we are faced with a unique set of circumstances, there are generic lessons we can learn from different historical periods. Amongst these is the need to be imaginative in using public policy instruments and financing mechanisms to overhaul the flawed foundations of our country's social and economic structure. I think that provides a useful backdrop for the discussion that we're going to be having. Maarten will take us through the global and domestic economic outlook, after which Richard and I will then discuss some of the political issues and trends that are emerging in the midst of this pandemic. I think it's important to stress at the beginning that an assessment of the political trajectory or the direction of travel in politics, particularly from a policy perspective, is very important in seeking to gauge what the future economic outlook might be. Before I hand over to Maarten, may I just please remind you that you can post your questions online as we go through this webinar, and we will be able to come back to your questions after the presentation, but it would be very useful if you do that whilst we are speaking. So may I pass over to you now, Maarten, to take us through the economic outlook.
Thank you, Lawson. Good afternoon, everyone. It's good to spend time with you again. This is now a regular way that we communicate with our clients. So I'm just going to share my slides, use as part of the discussion. So you should see the slides now. So in the next 10-15 minutes, I just want to quickly give you an update in terms of what's been happening since we spoke last time. Obviously, things are moving quite rapidly at this point in time in terms of markets, economies, and also the virus. I don't want to repeat a lot of the things that we've said earlier in terms of our views. So I want to share with you some of the newer data and trends that's been coming out of late. So the first question, again, are we getting better? We don't want to spend too much time on the virus, but it's obviously important to understand how markets are behaving at this point in time, but also in terms of our outlook for economic recovery going forward. Just one or two slides on that. Again, the Financial Times is a very good way of looking at the data and providing very accurate, up-to-date information. So the important factor on this graph is the number of people dying or the number of deaths. And clearly, again, you know, the US at this point in time is the country that's been hit the hardest, but you can clearly see that that trend is slowing down. And then if you just look at what's happening in South Africa, we are certainly looking better compared to many other countries in the world. Although the trend is still growing, it's increasing, it is not as steep as we've seen in many other countries. It is early days, and you know, we are only starting to see an increase in tests as we speak, but the progress so far definitely much better versus other countries. This is quite a busy graph, so let me just quickly explain that. This basically shows the calendar from January to December. It shows the average number of people that died in any case over the past 5 years, and then the red line shows what's been happening. You will see that for most countries, as the crisis started to hit home, the number of deaths increase much more than what it's typically been on average. And then as they get it under control, they're reverting back to just the normal deaths that you typically see in the economy. So all the countries are listed there. You will see that most of them, you know, had this increase in the number of people dying compared to the average. And fortunately, we are seeing the trend reversing back to normality. Very importantly, however, is if you look at South Africa, we're one of the countries with no excess deaths so far. We're still below our typical average for the year, as is countries like Israel, Iceland, and Norway. And part of the reason there is the fact that we've been in lockdown much earlier. The other reason is the fact that, you know, we've seen less crime, violent crime, motor accidents, because people are staying home, obviously no alcohol, so there's no accidents around that. So all of those are actually contributing to keeping hospitals' capacity open. So that shows that, you know, the lockdown, at least from people dying, had an impact in South Africa. Last slide on the virus before we start talking about the economy. Yes, the numbers are increasing rapidly. It seems like over the past couple of days, it's probably going to flatten out. The main reason for this increase is the fact that governments got to the point where we could roll out more testing. So I will take you back when we did the first webinar, just as we went into the lockdown, we were doing about 800 tests per million people. We're currently running around 15,000 tests million population. So definitely a huge increase in the number of tests, and obviously on the back of that also an increase in the number of positive cases. But the important factor is that the percentage of people tested and being then positive stays constant. So that's a good sign in terms of the spreading of the virus. So just that on the virus, definitely some positive signs all around the world in terms of getting it under control. We're probably still on the early days in terms of our peak infection, but given what we've been done so far, there's some positives in the pipeline. Quickly turning to the economic impact, this time around, I'm not going to look at China. We spoke about that in some of the previous webinars. I just want to focus on what's been happening in the States. The US is the biggest economy still in the world. They do have the most important consumer. So if that consumer is under pressure, it will have a massive impact on the US economy and the global economy and recovery. So at our earlier update, just as the crisis started, I showed you this graph, which then suggested that, it is going to be worse than 2008. So at that point in time, we had about 1 million people that's been fired. That was very much in line with the numbers we saw in 2008. And as a result of that, the unemployment kicked up to about 4.5%. Then as the years went into lockdown, I will show you the next slide, which is actually exactly the same one, but all the amount of people that has been unemployed dwarfs any numbers that we've seen historically. So we've now got more than 20 million unemployed. There's actually closer to 30 million are unemployed in the States. And as a result of that, you'll see the unemployment numbers shot up to double digits, currently 14.5, and we expect this to increase even further going forward. This is important because remember what I've said, this is the biggest economy with the most important consumer. If we see this kind of unemployment and people without income, it will have an impact in terms of the recovery for the rest of the world going forward, but also company profitability, which we'll get back to. So the Saturday after that print, just to show you what happened, it was quite striking. This is the New York Times. They printed the similar graph, but they really showed the impact in terms of what that number is, something that we haven't seen in history ever before. And like I said, it is worse since the Depression. So clearly now, the world is preparing for a very deep and bleak recession, and probably very similar to what we've seen in the Depression. This is just another way of looking at the employment recession. That's a 2008 one, 2007-8. You can see that's been quite sharp, a very slow and long recovery back to normality. This time around, you can see it's been much more dramatic, very sharp. And as a result of this, we're probably going to see a much longer recovery. So I think compared to the view that we shared with you earlier this month, last month, we still do think that there is going to be a recovery, but it will take time. It's probably going to be much slower than most people expect. It will take time to get this amount of people back into employment. There will definitely be some of those jobs that will be lost forever, where we see structural changes in the economy and where people will need to reskill them before they can actually get back into the job market. As long as that takes to get back to normal level again, in terms of employment, that will have a significant impact on growth. So there's the first sign in terms of the impact. So a lot of people out of jobs, so they can't go to the shop and spend. So if you look at the retail sales, this is the orange line in the US, it dropped down significantly the last sprint. It is worse than what we've seen in 2008. And on the back of that, you will also appreciate that consumer confidence is starting to decline quite rapidly. This paints the environment to say that the US is going to have a very, very deep recession. And again, like I've said, it will take a long time, probably longer than what we've seen after 2008 to get back to capacity growth as people return back to the job market. This graph I showed also earlier this month, again, just an update. The orange line shows the leading indicator for the US. When it goes up, it shows the US is expanding. When it goes down, it shows the US is slowing down. A high correlation with the green and the black, which is company profitability. And when we spoke last time, the last print was around about -50, and now we're back to -100. So you can see the significant decline. What worries us is the fact that company profitability is now flat compared to a year ago, and this clearly indicates that there's still a lot of downside in terms of company profitability potential going forward. This shows a similar graph where the shaded area is previous recessions. It shows the black line, which is company profitability. So obviously in a recession, companies can't make profit, they make losses. As a result of that, the equity market will go down as well. What concerns us at this point in time, if you look at where we are at this point, company profitability is still flat. The economic pain, like I've showed, is only starting now. So there's definitely going to be more pain in terms of profitability. We will need to see a similar decline if it's going to be a worse recession than 2008 in terms of company companies making losses. Yet, if you look at the market correction, it's not close to that yet. And currently seeing a strong rebound. The rebound that we're seeing at this point in time, the risk on rally that's also spilling over into our currency as an example, that's definitely, in our view, a sugar rush. It is on the back of all the stimulation provided around the world, and from time to time, any positive news in terms of medical developments that's taking place to find a vaccine. But if we look at the economic pain that's in the pipeline, and again, like I've showed, the significant amount of people that lost their jobs, then we are positioned for markets to test lower levels in weeks and months to come. We can't see that markets can keep on grinding higher, given the fundamentals. Quickly turning to the local economy. Again, I've showed this earlier this month, but just to share an update, as the lockdown continued a little bit longer, and we realized that the economic pain is going to be greater. When I showed this earlier this month, the expectation for this year was probably a minus 3.5%. The numbers now is probably more than minus 6% for 2020. This is now the worst decline that we've seen in history since the 1950s. And you will appreciate the fact that this is going to have a massive impact on our unemployment as well. That's why I'm saying in the heading that I think South Africa is probably going to face a depression scenario while the world faces a recession scenario. And despite the 500 billion stimulation package that the government provided, that is unfortunately at this point in time not enough to cover that gap. As a result of that, you will appreciate that the consumer is not feeling great. So we've got the lowest consumer sentiment on record. If we look at manufacturing output, that totally disappeared as we went into the lockdown. This is the ABSA PMI index. It looks at the manufacturing output, and you can see a massive impact as a result of that. So if you do have manufacturing output disappearing, you've got the economy in the weakest decline on record, then you will also appreciate that your tax base is disappearing as well. And next month, we will hear about the updated budget. But just to give you a very quick indication in terms of what's happening at this point in time, numbers where we are right now suggest that we're going to have a 285 billion shortfall. We're not going to go into all the detail, but a big portion from that comes from a 9 billion or an 8.8% decline compared to last year. This is also on tax collection. In terms of the sin taxes, the fact that we didn't trade in alcohol, or legally trade in alcohol and cigarettes, that's already costing us about 1.3 billion rand. So it is going to be a challenge for Minister of Finance to show how we're going to cover for this shortfall. Is it going to be through additional taxes, or can we actually go, or do we need to actually go and borrow more? Then begs the question that if we look at what's been happening in our bond market, can we expect yields to move high again? So this is our 10-year bond, to give you an indication. So it was trading just above 9%. We had the downgrade. Obviously, as a result of that, yields went up into double-digit territory. This was a great buying opportunity, and we made use of that to increase our bond exposure for many of our clients. And then subsequently to that, the bond yields are back to where we've been before the downgrade. Now, you need to ask yourself, what changed? We're in a much more difficult fiscal situation. The world is still battling with a recession, yet the market is telling us that from that point of view, we're probably back to where we've been. We did expect that after the downgrade, these yields will decline slightly. Similar things happened in countries like Brazil after the downgrade, because then the uncertainty is out of the way. But then also going into a risk on rally, as I've explained globally, the Reserve Bank also providing liquidity pushed down the yields to where we are at this point in time. And we do think that it's still good value. Think about 9% in bonds versus less than 5% in cash. But we don't think this is a true reflection of the underlying fiscal situation in South Africa. Similar with the Rand, an update on the Rand. This is again a very long-term graph. Shows that we in crisis mode, so we're very much to that upper trend line. Similarly, we had in 2015 with Renegade. the 2008 crisis and after the Nasdaq bubble. But having said that, we do think that the turnaround in the currency over the past couple of weeks is just part of the risk-on rally globally. And like I said earlier on, that's part of the sugar rush that's happening around the world. If we look at the global fundamentals and also the local economic fundamentals, we do think that the currency is going to test weaker levels in weeks and months to come before it can more sustainably strengthen to better levels. So just two more slides in terms of the investment strategy. I'm going to summarize it very simply. Your yield opportunity is in South Africa. Despite the bond yields moving lower, we still offering very attractive yields relative to the rest of the world. So in the rest of the world, you earn 0 to nothing. And in South Africa, you can still walk away with a real yield. So we prefer yield in SA versus the rest of the world. But in terms of your growth or your capital assets, the global space is probably more attractive. You know, economies that have more stimulation in the pipeline that will recover faster and where companies can get back to business and make profit probably quite much sooner. Compared to South Africa, we rather underweight the capital side of it. Companies on the JSE need exactly the same kind of reforms that we need to get the economy going before they will add value to any portfolio. So in summary, before I hand back to Lawson, it is definitely the worst economic contraction since 1930, but we should avoid a depression for the following reasons. We've got a lot of stimulation in the pipeline that will help to avoid a systemic financial risk or see significant defaults in corporate space. It's unlikely that we will see permanent unemployment and income loss. Some of those, like I've said, will be industries where structurally they won't be able to be employed again, but it's not like in the 1930s. Also, very importantly, banks and consumers are in much better position this time around compared to the 1930s and the 2008, which will also help. So on the back of that, a rebound is possible as the economies open, but it will definitely be slower than expected. And where earlier this year, a lot of people spoke about a V and a U shape, we said it's probably going to be a U shape. But we think at this point in time, probably a little bit longer than that most people expect. Markets are running ahead of itself. I've showed that in terms of what's happening on the ground and in regarding fundamentals. So we do expect some pullback and more volatility as slower than expected rebounds unfold, and our portfolios are positioned for that. And then lastly, again, in an environment like this where there is a lot of emotions, don't let those emotions destroy your long-term financial plan. So stick to that plan, and then the longer-term benefit will be evident in your portfolio. So Lawson, I am going to stop there for now, and we will tackle the Q&A a little bit later.
Well, thank you very, very much, Maarten. It's a pretty bleak picture that you paint for us, but as you end off there, there were a few glimmers of hope, I suppose, trying to see what's possible and what might be possible in the future. If I can just remind participants again that you can post your questions as we go along. There's a Q&A button at the bottom of your screen. If you can please use that. We've had some questions come in already, and we will get back to answering those in a short while. But before we do that, I want to engage with you now, Richard Calland. We've seen, as I mentioned earlier, government announcing a risk-adjusted strategy to get ourselves out of the lockdown and to try and reopen the economy and productive sectors and allow people to go back to earning a living. It's had a huge economic impact on people in South Africa, as it has across the globe. As I said earlier, the president on Sunday announced a move down to level 3 of this risk-adjusted strategy. But given the fact that the infection rate is rising, what is it you think that prompted the president to take such a decision at this point in time?
Thank you, Lawson, and good afternoon to everybody who's on this webinar. You ask a very good question, which I think in many respects, it requires a kind of contradictory answer. South Africa is in a very unusual position. most of the countries that have had lockdowns have only started to ease their lockdowns when they were reasonably confident that the bell part of their transmission infection curve had been passed. In other words, that the worst was over, and that the infection rate and the consequent illness and death rate were also in decline. In a way, we are a victim, so to speak, of the effectiveness of our lockdown. And you and I, with our research team, have been tracking this extremely closely since February. And we observed how, in the early phase of this pandemic's arrival in South Africa, there was a short burst, a surge, when middle-class people brought COVID-19 into South Africa. What the lockdown did was to nip that in the bud very effectively. And it, in a sense, protected working-class people from middle-class infections. But all it did really was delay the inevitable. And the president, I thought, on Sunday was absolutely candid about that. He said, we were never going to prevent the spread of COVID-19. All we could really do was achieve a delay in the transmission rate. And they succeeded with that. The government strategy in that sense has worked, or at least part one of it. Part two is how you use that 2-month period. Was the hard lockdown used well by government to ready itself for the high point of transmissions which will approach in the coming weeks? And will it have used that time to build the capacity necessary to absorb the pressure that will be put on the public health care system and absorb the infrastructure reality that comes along with that, in terms of ventilators, in terms of protective equipment, in terms of the capacity to test, trace, and then isolate, which in the end is your middle to long-term strategy of containment. Now, we don't know yet, and we're not medical healthcare professionals. All we can do is isolate that as the governance question. And in the next few weeks, we will discover whether the South African government has used the lockdown period effectively. What was clear to the government was that it was unsustainable for economic and for livelihood reasons to keep that hard lockdown in place for much longer. People were getting restless, but more importantly, livelihoods were being completely crushed. And now the move to level 3, even though it has been accompanied by the rise in infections and everything that flows from that, is a necessary step. So it's going to give rise to, I think, some very difficult weeks. People, I think, will be understandably jubilant about the easing of restrictions, which have really bit them hard. I understand that. But at the same time, they're going to have to face the social as well as healthcare consequences of the rise in infections and illnesses. So it's going to be a very delicate time socially and a very delicate time politically.
Thank you, Richard. There's been a lot of debate and discussion around the rationality of some of the measures that government has put in place. I mean, the alcohol and cigarette bans in particular, and then I think what has proven to be quite a controversial announcement last night, that places of religious worship will be able to function as from next week. Now that's generated a lot of discussion. What does this say to you about the cohesiveness of government's political approach to dealing with the crisis? We've dealt with the public health aspect of it, but in terms of the politics of it, what is this saying to us?
Well, I think the president, having shown very strong leadership in the early phase of this pandemic, has chosen in later weeks to govern through the collective. And in many ways, that makes a lot of sense, because this is a very complex, multidimensional problem. And it makes sense to have a lot of people in the room to grapple with it and to reach a consensus about what to do. But I do think one gets a sense that there are strong, heavyweight politicians, such as Nkosazana Dlamini-Zuma, such as Abraham Patel, who are inevitably pushing in the direction of travel that they prefer. And what you will find in a crisis like this is that seasoned political animals like them will use the opportunity to push their own particular agenda. And now we know that Dlamini-Zuma has had a decades-long war almost with the tobacco industry. She hates smoking. She's very comfortable with a nanny state approach that says that it's bad for you, and we're going to push back against that. Patel, on the other hand, is also but with different ideological reasons, comfortable with a centralist kind of control approach to the economy. And he sees this as an opportunity to increase fairness in trading and so on. Now, I understand that that's given rise to quite a lot of confusion. And the problem with governing through a collective is that the collective is only as strong as the weakest link in the collective. And there are some very weak links, unfortunately, in Ramaphosa's cabinet, and Bekele is one good example of that. So the approach of the police force at times has appeared irrational, as well as heavy-handed. Your point about, you put it very demurely, the controversy about the announcement yesterday that religious gatherings of up to 50 people, to me that undermines the whole strategy, and it infuriates me because thus far, even the most uncomfortable regulations were at least linked somehow to a rational basis or a scientific basis. It at least was arguable. And I'm talking about the alcohol, even the cigarette ban and the exercise regime and so on. People might not like them, but there was some kind of rational basis for them, and often there was a scientific basis. But the decision about religious gatherings flies in the face of that entirely. It really runs a coach and horses through the government's strategy and its credibility, because we know globally and in South Africa, those sorts of gatherings have proved to be the ultimate hotspots where transmission happens very, very fast. And most dangerously, it happens often with older people who tend to go to church more than younger people. So I think it's a very bad decision. And I think it's going to prove to be a very costly decision that the government will come to regret.
Now we know that there have been several threats and of challenges and several challenges, legal challenges to aspects of the lockdown regime. The challenge to the continued ban on the sale of tobacco and cigarettes is still going to come before the courts. But there've been there's been a broader challenge that has been brought by the Democratic Alliance, the official opposition, challenging the constitutionality of the Disaster Management Act under which we are currently governed. And that speaks to very much the role of Parliament. And what role does Parliament play during such a state of national disaster? But my question is slightly departs from that, is what has been the role of opposition parties in all of this? And what role have they played? How have they contributed towards the governance framework that we currently have?
Well, it's a very interesting question, because I think at a time of extreme national crisis, what tends to happen in politics is that opposition parties and opposition factions, even within a ruling party, tend to be sidelined. All the attention is on the executive, all of the attention is on the president and the cabinet, and there is very little space for opposition parties to get into that public domain. And opposition parties then have to make a choice. Do they just accept that and play the long game and wait for a later period? Do they, in a sense, aim to win the peace rather than win the war? Or do they try and jostle for space? Now, the DA, for a long time, were advocating a so-called smart lockdown, and it's the government's approach. But they did a sudden U-turn or flip-flop on that a couple of weeks ago, and I think it was a misread, because they suddenly panicked, feared they were not getting enough attention, feared that they were not distinguishing themselves enough from the government, and therefore played to what they may think is their base in arguing for an end to the lockdown. Now, the idea that you would go have a hard exit and go from abandon the sort of structured smart lockdown that they and the government had initially presented as the right thing to do, to a sort of sudden hard exit where you abandon all restrictions, was really rather fanciful, and I think rather foolish. And I think it's lost them credibility, certainly with a broader electorate. The EFF, I think, are more interesting. They've played a remarkably muted, almost constructive kind of role throughout this. But that started to change minutes after the end of Cyril Ramaphosa's speech to the nation on Sunday night, where they opened up a front, in effect, against Ramaphosa, saying that he was now abandoning the people of South Africa. He was leaving it to people to have to fend for themselves. And I think they are positioning themselves to blame Ramaphosa for all of the deaths that will happen from now on. And that's a very populist, very dangerous, very conflictual approach. But of course, it's right out of their populist playbook. The question is whether it will land. And it takes us back to our earlier discussion, which is about whether the government is going to be able to handle the inevitable public health pressure that is going to arise as the transmission rate spikes.
Well, Richard, I think that's a useful point at which to pause this conversation for now and to go to some of the questions that have been posed. We have a number of questions, and we hopefully will try and get through as many of them as we can this afternoon. And the first one that I'm going to pose is to you, Maarten. And the question is from William Poole. What is causing the rand strengthening over the past week, and to what levels is it likely to stabilize?
Yeah, yes, Lawson, I think I have addressed it in the presentation to an extent that the rand strength over the past couple of weeks is largely on the back of this risk on rally globally. So globally, if you look at markets, you know, we are seeing markets going high every day. The reason for that is all the stimulation that central banks provided, some progress in terms of finding a vaccine. And in that typical risk on rally, you know, investors will look around and say, but, you know, we've been in the dollar now for some time for safety, but in that same time, they've cut rates to zero in the US. So maybe let's go and look at countries where there's higher yield potential. South Africa is high yielding, so we benefited from some capital flows back into the country, and that supported the currency. Like I've said, we don't think this risk on rally got enough legs to continue much longer. We do think that markets will soon realize that you can't keep on running just on the stimulus that central banks provide, and the real pain is in the pipeline. So that will probably push the currency back to weaker levels in weeks and months to come. So where we are at this point in time, I would argue that, you know, it is a level that where one can consider even buying dollars. But the currency is definitely going to test the weak levels we've seen earlier this month in time to come.
Thank you, Maarten. There's another question here about how much South Africa has actually loaned from the IMF and the World Bank. And let me try and deal with this very quickly, I think, because we know that the figure that has been mentioned is that the loans from international development finance institutions will amount to about 95 billion rand as part of the 500 billion rand package, stimulus package or relief package that government announced earlier. What we will see, though, in a few weeks when the Minister of Finance, Mr. Mboweni, presents his readjusted budget for 2020-21 is exactly where all of that money is going to come from. But we know for now that the figure on the loans from the New Development Bank, the IMF and the World Bank will amount to about 95 billion rands. If I can then come to the next question to you, Richard. And, you know, this is about the contradictory statements from government, such as the move to level 3 on a nationwide scale, being contradicted by Dr. Zweli Mkhize yesterday. Do you think that this is a move to undermine the president or just bad communication on the part of government?
Well, if it was a deliberate attempt to undermine what's going on, that would be extremely serious and would be worthy of an inquiry or for the president to take action and to fire whoever's responsible. So far, Zweli Mkhize has had a very good war. He's played a pretty solid hand, I think, and certainly he's been much clearer in most of his communications than, for example, Dlamini Zuma or Becky Cele. Yesterday, what happened was a classic balls up that you sometimes get in life, and you even get it at the highest levels of government anywhere in the world. He's confirmed in the last hour what many of us discovered informally yesterday, which was that when Dr. Mkhize presented to the National Council of Provinces yesterday, he used a PowerPoint slide deck which included an old slide, and he's actually used the expression old slide today, which included a bullet point that said that hotspot areas would remain at level 4. Now, given that the hotspot areas covers all of the main economic heartlands of the country, Cape Town, Johannesburg, Durban, and so on, this caused a massive moment of chaos, confusion yesterday, which had to be then nipped in the bud. What business needs now is certainty. It needs clarity on what lies ahead. It needs government to be absolutely crystal clear about what business can and can't do and where it can start to trade again. Any uncertainty in that is going to be very expensive. And so as you ease the lockdown, no one should pretend that all of this is going to go perfectly. This is governance of the most challenging sort in extreme conditions. So, we have to be realistic and reasonable. No government is going to get this right all of the time. But that sort of kind of cock up that happened yesterday is, well, it's incompetent, of course, but it was, I think it was cock up, not conspiracy.
Thank you, Richard. The next question relates to a wealth tax, discussions about it in various quarters. Do you think that a wealth tax is something that is on the agenda for South Africa? And I think this is a question that both Richard and Maarten may wish to comment upon. So let's start with Maarten.
Yeah, I think, this is something that's been talked about for a long time already. And given where we are at this point in time, there's only one way that government can sort this out. It's either through borrowing more money, and there we're already with our back against the wall, or some form of tax. If I listen to some of the comments at the moment where they're talking about we can't go back to an inequal society after lockdown, we need to use this crisis to reset the economic system. It is almost as if government is preparing for that. Having said all of that, to implement a wealth tax is not something that you do overnight. So there's a lot of work that needs to be done. But I do think our country is moving into a direction, also given the legacy and the inequality, that some form of wealth tax is becoming more likely every day.
Richard, do you want to add to that?
It's speculation. The idea of a wealth tax is something that the Davis Commission and others have been looking at. Treasury have been looking at it. There was no sense earlier this year that it was going to be something they reached for yet. It might be something 12 months away. But of course, what COVID-19 has done is completely shake the pack, and in some respects has escalated a whole range of different policy ideas and considerations. So I think we all wait with a good deal of bated breath for the new budget next month. I think government would be well advised to take advantage of the various loans that are available from the international finance sector. I think the announcement, a month ago now, that the IMF emergency fund would be accessed, I think it was an important move. It certainly was something the market was looking for, because it was wanting to see that this was a government that could pragmatically reconsider how best to handle the fiscal crisis that it faces. And it seemed to us a no-brainer that the IMF loan should be brought into play.
Thank you, Richard. Back to you again, Maarten. You've covered some of this in your presentation, but there's quite a specific question about how long do you think it will take for a global recovery to come about? And have we reached the bottom yet, or are we still going to dip further before the curve begins to turn?
I think that in terms of the economy, we are probably going to see the bottom in the next quarter or two. Most countries around the world are starting to open up. As they start to open up, things can only start to improve from that level going forward. So I think we're very close to the bottom. Just back to the US, we've lost 20 to 30 million jobs. It's unlikely that we'll lose another 20, 30 million jobs in months to come. So I think we're very close to the bottom, but the recovery is going to take a number of years, probably the best part of 5 years. And even when we get to that point, I do think globally and in South Africa, we're still going to be below the capacity growth or the levels we have been if we haven't had COVID. So it is going to be a slow recovery, but not a depression. And I think that's what investors should prepare for.
Thanks, Maarten. The next question asks, when will the full level 3 regulations be available? Let me try and deal with that. I think the answer to that is it will be at some point this week. I think initially we were expecting it to be today or tomorrow, but given that government's press conference on the level 3 regs has been postponed yet again from today, possibly till tomorrow. So I think we'll expect to see those regulations either tomorrow or on Friday. And then a follow-up question to that, in a way, Richard, is the question is Minister Nkosazana Dlamini Zuma effectively in charge of the country in terms of the Disaster Management Act?
Well, I suppose put in the terms of the last part of your question, to some extent, yes, because that's what the law prescribes as her role. The law says that her ministership, and it's that position, not her, is the designated ministerial position that should play the coordinating role that is necessary for the Disaster Management Act. And her portfolio is cooperative governance, and that means that, and the idea behind her position being in that designated role is that this crisis requires coordination, obviously, across all parts of the government in terms of national, provincial, and municipal governance, and that's her job. That puts her in the driving seat, certainly, in terms of how the government responds to the crisis. She's a very experienced politician. She was in the cabinet for many, many years. She was the chairwoman of the African Union. She's technocratic by nature. She's serious-minded. And although she's not everybody's cup of tea, and communication-wise, she sometimes muddies the water, I think that she's taken this role very, very seriously, possibly too seriously, in the sense of being very hands-on and very controlling. But on the other hand, if she wasn't doing that, if she was laissez-faire and letting things ride, would probably be even more unhappy about that. So legally, it's certainly been the case that the president has to cede some political and leadership space to her, but ultimately he is still the boss. He is still the head of the executive, he still chairs cabinet, and all of these structures are accountable to cabinet, including the National Coronavirus Command Center, the NCCC. And I know, Lawson, you've had some concerns about the authority, whether they've had the necessary legal authority to conduct their business. Is that still a concern of yours, or do you think they've managed to resolve that now?
Well, I don't think they have, but I think, again, it comes down to poor communications, because I think, in principle, there's nothing wrong. And in fact, there's a lot to say for having a coordinating structure, such as the National Coronavirus Command Council. The debate has been about whether that body has any decision-making power, any lawful power to take decisions. And quite clearly it doesn't, because it is not a creature either of the Constitution or of law in terms of the Disaster Management Act. And I think it's the messaging from government that keeps referring to decisions taken by the NCCC that is wrong. Those decisions need to be taken by cabinet, which we assume that they are, but it's that loose language that creates the confusion that exists. We're coming towards the end.
Sorry, Lawson, can I just quickly jump in there and
sure.
extend the question? Does this mean that under the Disaster Management Act, they've got more power to maybe, while we're under this, push through some policy that can even be against the Constitution that otherwise wouldn't have been possible?
The answer to that, Maarten, is no, they can't, because whilst government and the executive have extensive powers under the Disaster Management Act, as I said, some of that has been challenged and fought by the DA in terms of being too broad and unconstitutional. What the Act says is that any action that government takes must be directly related to dealing with the COVID-19 pandemic. So any action that they take that is not directly linked to dealing with the pandemic would be deemed to be ultra-virus and therefore unconstitutional. So they cannot use it as a cloak to do something that is totally unrelated. If I can come back to you, Maarten, there are a couple of questions here about China, which I'm sure you were expecting. So the first one is, how would the relationship between the USA and China impact upon the potential recovery? And then a question that says, in the context of the current conflict between China and Australia, to what extent are we wedded to China?
Sorry, I just didn't get the last one. China and Australia?
given the conflict between China and Australia, the question is, to what extent are we aligned with the Chinese?
Okay, I think, you know, the US-China relationship obviously last year has been, you know, the main issue for markets to deal with. We had all the trade tension, the phase one deal, which everybody forgot about earlier this year. I think, you know, Trump is looking for someone to blame. You know, he managed the crisis very differently, probably late, and he is turning to China as for part of that blame. If he wins the elections, and there's a good chance for that, you know, he will keep going with protectionism. So I do think, you know, tension between the US and China is something that we are going to deal with for much longer. We're in an environment globally where we are seeing more protectionism, almost a unwind of globalization. That's something that doesn't happen overnight. But as a result of that, you know, the tension will remain. Also, what's happening in Hong Kong at the moment, that's definitely not helping with the US-Chinese relationship. And then you can probably add, you know, many other countries at the moment, Europe, Austria, you mentioned Australia. A lot of them, maybe not from a trade point of view, but are asking very tough questions about the virus and how they've been dealing with that. You know, in the end, if we're in a world where there's less globalization, China is our biggest trading partner. So it can have an impact on us, but like I said, we're talking about very long-term trends that needs to play out. This to change your supply chain from China to any other part in the world is something that doesn't just happen overnight. But be prepared that the next decade will definitely be a decade with a lot more tension between East and West.
Thank you, Maarten. As we come towards the end, perhaps one final question to you, Richard. And you've answered part of the question about the EFF already, so I don't think we'll dwell on that. But the question here is about what does the silence of Ace Magashule and I guess the Zuma fight-back faction within the ANC, what does that say about where things are politically at the moment?
So when I answered the first part of your question on this a few minutes ago, I used my words relatively carefully. I said that what tends to happen at times of national crisis is that opposition parties and factions within the ruling party can be sidelined. And that, in fact, is what has happened. So Ace Magashule and that particular crowd of rogues within the ANC, what we call the fight back faction, were, I think, very much sidelined, have been very much sidelined by this crisis. What they have to say and what their view on life is completely irrelevant. All the power and authority sits with the presidency, with cabinet, and with the national command center. So, and they're excluded from all of that. But all they can do is bide their time. I think the relationship to watch is the same relationship we were watching very closely before COVID-19 arrived, which is the overlap, the apparent informal alignment of interests and strategy between the fight back faction and the EFF. And the kind of collusion that goes on there and the corruption that lies behind a lot of that relationship is still probably the most serious threat to longer term political stability and economic stability in South Africa, I would argue. Nothing in a sense has changed. What COVID has done, however, is given the president and the reformers within the cabinet an opportunity to consolidate power, to drive their agenda forward. I think the question, though, is whether they're too busy putting out the day-to-day fires of managing the pandemic and the government's response to even think beyond the end of the week, let alone the end of the year. But at least the president doesn't have to deal with the inconvenience of the National General Council, which was scheduled for June this year, but that's been, as I understand it, postponed indefinitely. So that's at least one political inconvenience that he hasn't got to deal with.
Thank you, Richard. Maarten, any parting words from you before we wind up?
I think, you know, we are talking to our clients and we are in the business of looking after other people's money. I know it is a very uncertain and gloomy picture that we face, but we've learned through many cycles that there's always opportunities. And rest assured that, you know, despite what's happening on the ground, and we will keep on communicating quite actively on that, that your portfolios and your investments are in safe hands, and on a daily basis, wherever we can lock in opportunities, we are doing that.
Great. Well, just thank you once again to Maarten Ackerman, to Richard Calland. We hope that for the all of you participants that have tuned in for this webinar, that you found it useful and informative, and it's answered some of the questions that you have. I know we perhaps haven't answered them all, and perhaps not in the way that you would like, but we certainly value your participation in this, and we look forward to you joining us again in the near future. Thank you from Citadel and the Paternoster Group.